We were talking about the volatility yesterday. It was NVIDIA that seemed to pull the whole markets down. Today's also triple witching for options expiration. About a third of NVIDIA's options come up for expiration today as well. Just when you see all this, what does it make you think? Concern or an opportunity?
Neither. I just think that we're at a point of inflection, and I'll bust it for you. Sorry, that's my word of the day, inflection. But I think that's where we are. And so when we're thinking about that, I don't know the inflection means we're going down, which would then create opportunity. It might just mean that we're starting to plateau from here. So, we were on this torrid pace. We're up 15% year to date. If we were up, I just did this calculation, if we continued this pace, the market would be at 62.50 by the end of the year and trading at 25 times earnings. That doesn't seem reasonable. So I think we're at this inflection point where leadership is inflecting and the direction of the market is inflecting. If it goes down, yeah, there's opportunity. If it plateaus, you kind of stick with what you've got.
All right, so you see it as an inflection point. Again, your WEX word of the day today is inflection. That kind of really brings me to a note from Ned Davis.
Sorry to jump ahead.
No, you're fine. From Ned Davis Research, we are kind of at an inflection point also when it comes to the election. We were just talking about the Biden campaign raising money. Ned Davis Research out with a note yesterday saying that the second half of the election year, obviously this is an election year, the median gain for the S&P is approximately 5%. I mean, just based on historical precedent, do we probably have more upside, or do you think this might be just a different situation with AI and a lot of other things going on in the world?
Yeah, you know what's interesting? I think that and NVIDIA as well are in the same camp where I think they've pulled a lot of things forward. This is a very forward-looking, very well-informed market. We process information today far faster than we ever have in the past. So knowing that Ned Davis statistic, I think that's already in the market. I think NVIDIA pulled forward really great earnings. It pulled forward this index inclusion. It pulled forward the stock split, and that's in the price. So I don't think we get that bump the same way we did in the past.
By the way, Ned Davis also raising their S&P price target to 57.25. We've seen just a flurry of price target increases in recent days. Coming up later today, we get PMI. So both services and manufacturing, the estimates show contraction. Is that meaningful for this market? I mean, there was a minute there. Every economic report, every cough and spit, the market's reacted. Do you think we could see a similar setup today with flash PMI?
So the point on that is the word you just used, flash. It's flash PMI. That's short term. It's preliminary. It'll be revised better or revised more precisely in 10 days from now. So unless it's something really extreme, I don't think we blink an eye. If it's remotely in line, remotely expected, the market just yawns and moves on right now and waits for the real numbers in 10 days.
So, we talk a lot about NVIDIA here on CNBC. I think everybody talks a lot about NVIDIA. And the comparison a lot of people make
so boring.
is if NVIDIA is the new Cisco. Have you ever heard somebody say that? So one of your picks for us today is Cisco.
There was a great article actually in the New York Times yesterday. I'll just jump ahead. Where they were comparing Cisco and NVIDIA, and they said, look, the last time a computing infrastructure stock reached the largest position in the whole market, it was in March of 2000, and that was Cisco. And by the way, it had just outpaced Microsoft from there, and it didn't really bode well afterwards because what happens is maturity kicks in, competition kicks in. So what goes around comes around, right? And now here you are. One of my picks for the day is Cisco, because what you have here is you have Cisco trading at a multiple of 12.5 times earnings. It's like a 60% discount to the tech sector. You cannot have an AI boom without network improvements, and they're coming off of this inventory correction. They will return to earnings growth in 2025. I want to be a little bit ahead of that. It is not going to be whatever NVIDIA has been. It's not going to be a 10-bagger again, but it might be a really nice solid 5, 10, no, probably 10, 15, 20% return over the next year.
I know you're a dividend investor too, dividend over 3%. I know you're a dividend investor too, so dividend over 3%, that must make it attractive. Very quickly on this one, Jenny, you also gave us another pick in the transport space. You're the second person this week, GXO. Stock's been down big this year. Why are you bullish on GXO?
Okay, so you know how we were just chatting the other day, Frank, about do you wait for the market to correct to put money to work? And I was saying, no, you can always put money to work. And this is one of those situations where this stock's at a 52-week low. So it doesn't matter that the S&P's up 15%. GXO is at a 52-week low. It's trading at 15.6 times earnings. It's got 8% earnings growth ahead this year, mid-teens, mid to high teens for the next 2 years after that. And why is it down so much? I'm not really sure. It was spun off from XPO, and it's their logistics outsourcing business. So we know spin-offs don't get a lot of love. We know they get neglected. They had their first quarter earnings report a few weeks ago. They're taking market share. It's a fabulous company.